Hello and good morning. I am Kenny Polcari, your host of the party, and today is Thursday, June 2nd, 2022. And here's what you need to know to get your day started. Yesterday, CEO JP Morgan Jamie Dimon comes out and says, brace yourselves for the coming hurricane, while the co-head of research, Marko Kolanovic, says, don't be ridiculous. Can you imagine what it's like in the elevator at JP Morgan? The Saudis remaining strategically ambiguous over what they're going to do about oil, and Russia is expected to remain the plus sign in OPEC+. More Fed members are calling for aggressive interest rate hike moves. Oh my God, think about that. And the Platinum Jubilee has begun as Britons across the nation sing God Save the Queen. And what are we having tonight for dinner? We're going to have the baked chicken thighs with goat cheese. They are delicious. Okay, well, look, they tried to start June off with a bang, but instead it ended with another bust yesterday, right? Markets ended lower. The Dow losing 177 points. The S&P off 30. The NASDAQ fell by 90 points, and the Russell gave back 10, while the transports lost 106 points, right? Kind of casting a negative tone over the markets as the new month begins. Investors parsing through the macroeconomic data points, recognizing that the Fed has not succeeded in slowing growth enough to impact inflation, and that they're going to need to get more restrictive in order to slow the runaway price gains. S&P manufacturing PMI coming in at 57, just a hair below expected 57.5, while ISM manufacturing PMI came in at 56.1, much stronger than the expected 54.5. Prices paid component rose to 82.2. That's not good. It's inflationary. New orders rose to 55.1, still suggesting strong demand. Job openings report showed that there are even more jobs available than expected, suggesting that wages are going to surge as employers are going to be forced to pay up for talent, both to attract them and to pay them a wage that will allow them to live in a world with high inflation. And that's going to help to fuel the 1970s-style wage price inflation spiral. Then JP Morgan CEO Jamie Dimon, as I said, came out and told us to prepare. He's preparing the biggest bank for an economic hurricane on the horizon caused by the Fed and the Ukrainian war. He then advised that investors do the same. His comments took the financials, the XLF, down 1.6%. After he also said that private borrowers may be stranded as conditions tighten, suggesting a tough time ahead for the banks that have all extended way too much credit. And to tie up any loose ends, he suggested that as the Fed becomes more restrictive, it threatens to tip us into a recession. So now we need to define how we use the word tip. Did he mean gently tip, or did he mean fall off the cliff tip? Now, what's interesting is that JP Morgan's co-head of global research, Marko Kolanovic, thinks that Jamie is wrong. Either way, that's what makes a market. Buyers and sellers and differing opinions, right? Now, what's funny about all this is that yesterday was June 1st, and you know what that is? That's the start of hurricane season here in Florida. And coincidentally, there's a storm brewing off the Gulf of Mexico, likely to become a tropical depression. And if it does, his name will be Alex. Now, mimicking Jamie Dimon, weather.com is telling Floridians to brace yourselves this weekend as the storm hits. Coincidence? Not so sure. Then at 1 o'clock, St. Louis' Jimmy Bullard took to the podium telling listeners that he is urging policymakers to be more aggressive, raising the chances of a third 50 basis point increase in September. Now recall what Chris Wallace said on Monday. You can see my note from yesterday. Chiming in was none other than San Francisco Fed President Mary Daly. And guess what she said? Oh yes, get more aggressive. This after Atlanta's Rafi Bostic clarified his September pause comments from 2 weeks ago. So now do you see how they used Waller, who's a non-voting member, to start to raise the idea of the Fed becoming more aggressive? He floated it in Germany, no less, and then the voting members begin to speak out in support of it ahead of the June meeting, which takes place on the 14th and 15th. Today, we're going to hear from Cleveland's Loretta Mester, and guess where she stands. We also found out that manufacturing PMI and new orders in both Italy and Germany fell sharply, suggesting that the Eurozone is on the verge of a recession. Couple that with what the U.S. CPI and PPI data is detailing, and it's not hard to see how a global recession is brewing. No matter what the Fed's favorite inflation gauge says, the PCE deflator tells them, right, because it tells them that it was backing off, Remember, J.J. Powell, along with the whole committee, they were the ones who refused to see inflation brewing back in 2021. He was the one to tell us all that we were wrong, that everyone was getting hysterical for no reason. Inflation was transitory. Yeah, well, that's what Janet Yellen said too. And did you hear her mea culpa on Tuesday? If you didn't, you can go back and Google it. It's really fascinating. And before you go and take sides on either way, recall that inflation in the country started to spike in May of 2021 when it went from sub 2% to 3.5% in 1 month. That was the clue. And that was well before Vlad started the war and well before the latest China lockdowns. And that was when I said the Fed needs to begin raising rates gently. But alas, no one was listening. Had they begun raising rates back in the summer of 2021 in small increments, inflation would not be running at 8.5 or 9%. But hey, what do I know? 10-year Treasury yield spiked higher yesterday, surging to 2.94% before settling in at 2.91. And this morning, yields are holding steady right there. Oil had a wild day, rising to a high of 117.60, just ahead of that OPEC Plus meeting to discuss supply issues and whether or not Russia would remain part of the alliance. By the end of the day, oil pulled back and closed at $115 a barrel as some analysts started to suspect that maybe there's a solution somewhere in there. This morning, we're seeing pressure on oil, right? It's down 2.2%, trading at about $112.75. Investors are cashing in on the recent rally as the Saudis remain strategically ambiguous. Will they boost production? Will some other members chip in? Think maybe Kuwait or Qatar? What will be Russia's role going forward? In any event, RBC's Halima Croft and other oil analysts are suggesting that OPEC Plus will figure this out and raise production just enough to meet global demand without causing oil to tank. And that's causing traders to ring the cash register. Look, oil rallied 14% during the month of May. It's up 61% year to date. While I think it goes higher, the trader types are paid to trade it. So it would not surprise me if we see oil pull back a little bit, like to maybe $110 a barrel, where it should find some additional support. This morning, U.S. futures are up, attempting to take back 3 days worth of losses. Now, early this morning, the Dow futures are up 120, the S&P is up 20, the NASDAQ was ahead by 88 points, the Russell up 9. Much of the talk today is going to be about oil. It's going to be about monetary policy. It's going to be about Jamie Dimon's comments yesterday. And it will be about the speculation now swirling around what the Fed is thinking and what we're going to hear from them in 2 weeks. Economic data today includes the ADP employment report. Expect 300,000 new jobs to be created, or restored, I would say. Unit labor costs are expected to remain elevated at 11.6, think wage pressure. Factory orders of up 0.7%. Durable goods orders up 0.4%. Capital goods ordered and capital goods shipped are also due out. So those are also going to be relevant data points. European markets are up. The celebrations have begun in the UK as the country honors the Queen's Platinum Jubilee. That's 70 years on the throne. In addition, investors there are still digesting the inflation numbers that hit them on Tuesday. German, French, and Eurozone rates are at all-time highs, and that suggests that the ECB, the European Central Bank, like the Fed, is going to be forced to finally do something. They too must stop pretending that their actions haven't caused all this runaway inflation. Earlier this morning, the markets across Europe were all up about 0.5%, maybe 0.75%. The S&P closed last night at 4101 after piercing 4100 yesterday and trading as low as 44,073 before it found support. This morning's action, like yesterday morning, feels like they want to take it higher again, but the jury's out. Lots of commentary to digest and lots of macro data to consider. Tomorrow's going to bring us the May non-farm payroll report, and there will be lots to discuss after that gets released. The report is also expected to show an increase of 325,000 new jobs, a loss of manufacturing jobs, and average hour earnings year over year of up 5.2%, which is down from last month's reading. All this as inflation remains elevated at 8.5%, likely going higher in the short term. Trendline resistance on the S&P is at 42.76, while true trendline support or true support is at 3,800. So it's a wide range we got to play with over the next couple of months. Okay, what are we having for dinner? We're having the baked chicken thighs with tomatoes and melted goat cheese. Oh my God, so delicious. For this, you need olive oil, fresh lemon juice, peeled garlic cloves, oregano, salt, and pepper. You need a tablespoon of pesto. You need 8 bone-in chicken thighs trimmed. You need 2 cups of sliced cherry tomatoes. You need goat cheese and pitted black olives. You want to start out by mixing the oil, the lemon juice, the garlic, the cloves, the oregano, salt, and pepper, and pesto in a blender and pulse it until it's nice and smooth. Place the thighs and the marinade into a Ziploc bag, shake it up, mix it, let it marinate over the chicken pieces, then put it in the refrigerator to let it marinate overnight. The next day, take the thighs out of the refrigerator an hour before you plan to bake them. Let them come up to room temperature, remove them from the Ziploc bag, and discard the marinade. Preheat the oven to 400 degrees. Place the thighs now in a baking dish, a Pyrex baking dish, and bake them for about 35 minutes at 400 degrees. Remove the chicken from the oven and place the sliced tomatoes in the olives all around the chicken. Just, dump it kind of all on the chicken. Now you want to take some of the chicken juices, put it over the chicken while you got that, right? So that you moisten up kind of the top of the chicken because it's been roasting. And then you want to take the goat cheese and you want to crumble it all over the chicken pieces. Put it back in the 400 degree oven for about another 15 or 20 minutes until the chicken is cooked through. It's nice and crispy, and the tomatoes have kind of exploded and softened a bit, right? You remove it. You want to place the chicken on a big platter. You want to spoon the tomatoes and the olive oil mixture and the melted goat cheese all on top. You want to serve this with a large mixed salad. This goes a long way. You can have it, on a Friday night dinner. You can have it for Saturday afternoon barbecue. It goes a long way. You can make a lot of pieces. It's easy to do, and it's so delicious, right? The dish to feed a family of 4 should probably cost you no more than $50 by the time you buy the chicken, the tomatoes, the goat cheese, and the olives, and you got the olive oil, salt and pepper, the lemons, right? Probably $50 to feed a family of 4. You want to feed a family of 6, it might cost you $60. In any event, the day is getting started. The weather outside today is beautiful, but the storm is brewing coming Friday and Saturday down here in South Florida. In any event, until tomorrow, take good care.